Hey everybody, Tony Codispoti from the Great Vocal Majority, here to talk to you today about the employment situation summary from the Bureau of Labor Statistics for April 2015. Now let's go to the first chart. It's a little busy. These are the highlights of the BLS report for the month. I'll take you through the numbers gradually here. The U3 unemployment rate, which is the unemployment rate that is the official rate that is publicized that you hear about on the news. It came in at 5.4%, down 1/10 of a percentage point in the month. The number of unemployed came down by 26,000 people to 8,549,000, or about 3/10 of a percentage point in terms of the total number of unemployed. And the workforce grew by 166,000, which is how you got to your minus 0.1 points in unemployment rate. The workforce is now 157,072,000 people. That was up about 1/10 of a percentage point in the month. That's a little light compared to what we've been seeing. 166,000 is about 20,000 or so below the growth in the workforce that we've been seeing over the past year. The U6 unemployment rate, which counts all the people that are only marginally attached to the workforce, or people that are seeking better employment, that number actually went down by 1/10 of a percentage point too, but it's still sitting in double digits at 10.8%. The number of unemployed, long-term unemployed, that's counted as people who are out of work more than 27 weeks that are still looking for work. That still remains very high, although it did come down by 4/10 of a percentage point in the month, as you see here. It's still around 30% of the total number of unemployed, which is still very high because the historical average is around 15% for the long-term unemployed. Workforce participation rate ticked up a little bit, but it's still operating within that range. That's about at a 30-year low. And the workforce participation rate is an interesting sidelight, which I'll get to it before I finish off this chart. Jobs created in the month, 223,000. That was within expectations. However, there were 39,000 jobs taken away from the prior months. And if you remember, the month of March was extremely low. It was less than half of what the jobs created were in the month of February, and March was where 41,000 jobs came out. So they took 41,000 jobs out of the already low number in March, and they added 2,000 back to the February number. So March was a really bad month. Maybe it's an outlier, maybe not. We'll have to see as we go forward. But these numbers appear to be getting a warm reception in the market today. The average work week didn't change at all, and the average hourly wages went up another 3 cents, which is about a 2.2% increase year to year. And the industries that are leading that are, interestingly enough, utilities, which went up by 4.8% in wages, and the leisure and hospitality industry, which went up 3.9% in wages. Now, what I wanted to get to on this chart that I wanted to talk about is how the unemployment rate, the U3 rate, is becoming less and less reliable as an economic indicator. And part of the reason is because so many people have left the workforce that are able-bodied. And the way you test this, there's a couple of ways to test this. One way, you could just easily go to the Bureau of Labor Statistics report that tells you the number of people that are not in the labor force that are actually, hoping, that want a job. And they report that number to be about 6,258,000 people. In other words, out of the 93 million people that are not in the labor force, the Bureau of Labor Statistics says that there are about 6.3 million who of that number who would want a job. So to test that number, what we can do is we look at the civilian population, which is about 250,266,000 people, and we take the workforce participation rate as it existed, what it was at the time Obama entered office. And when you look for that number is 65.7% as compared to what you see here, 62.8%. So it's substantially a much higher number. And once you do that, once you do all the calculations, I'm not going to go through the numbers with you in terms of how it's calculated. But what it would really turn this number, this 5.4, more into a 9.7% unemployment rate. And that is, in fact, what the unemployment rate would be if those 6.3 million people in the that are not in the labor force, if they re-entered the labor force, started looking for work, they would be counted in the unemployment numbers. Right now, they're not being counted in the unemployment numbers. And so that's how you get to this actual adjusted rate of 9.7%, which a lot of analysts look at to say, look, this economy may look better than it does by using these statistics that we've used for many, many years. And I know a lot of people will say, well, you're just saying that because it's a political statement for you. You don't like the president or whatever. You know, it really isn't about that. What you really have to find out is what is really going on in the economy. I mean, we can start waving a victory flag like they did in Red China, when Chairman Mao would go down the boulevard. But 5.4% for an unemployment rate sounds good, but when you go underneath the covers and you look at, well, who's out there that really is looking for work and really wants to work, there's a gigantic pool of people that aren't even in the labor force anymore that are almost as large as the number of people that are out of work. The number of people out of work, 8.5 million, and there's about 7 million people that are not even in the labor force that would work if they could find it. That makes this report important to really understand, and not in so much in terms of like you're not disputing the numbers. You're just trying to say, well, what is really the relevancy of some of these numbers? So let's move on. Some of these charts I've done in the past. The annual unemployment rate. This is U3. This is how U3 tracks over time by presidential administrations, which you see down here. And the blue line here is the current month rate. And you can see that the current month rate is below where the annual rate actually is for U3. This just gives you a kind of a flavor of where our current unemployment rate tracks historically. Moving on to the next chart, this is the U6 rate as it tracks historically over the last 3 presidential administrations. Pretty much same story as U3. I mean, the percentage rates are higher, of course, because you're counting more people. And we can move on to the next chart, which shows who is actually leaving the workforce. Now, this is kind of an interesting chart because this supports the point being made that says the rise in the number of people out of the workforce and the decline in the rapid decline in the workforce participation rate is not due mostly to retirements, but mostly to people leaving the workforce. And this proves it, because what you got here is you got a 20-year chart. You got a chart going across 20 years. And what it shows is this part up here shows the retirees. Okay, and as you can see, over the last few years, I've kind of put a channel up here for you. You can see how retirees are beginning to slowly go up. They're ramping up. And that's the baby boom generation beginning to retire. Down here you have discouraged workers. And if you notice, discouraged workers kind of stayed within a range from this period all the way over to this period. But I pinpointed where Obama was inaugurated because the recession began prior to him entering office. So that's like back here. And you could see, look at all the discouraged workers leaving. That's all the discouraged workers leaving, and they're still out. I mean, it peaked and it's coming down, but it's still not down to where it was. Should be down here. Should be down here, or even below, but it's still way up. And that shows you who is actually leaving the workforce. Now, a lot of people have also criticized the job situation by saying a lot of jobs are being created are part-time jobs. Now, since the passage of Obamacare, as you can see in this chart, what this chart shows is the ratio of part-time to full-time employment. It shows you that in 1982's recession, we had a surge in part-time employment because it's, it's economic downturn. And then look at the rapidity of that decline in the ratio of part-time to full-time employment. That's a sign that the economic recovery is really taking hold, and you're seeing a lot of jobs created, full-time jobs, quickly. Look over here. This is the passage of Obamacare pinpointed, and look at the decline of the ratio of part-time to full-time employment. Yes, it is coming down, but look how much more slowly there's a lot of time in here. Look at this. This is over a period of maybe a year or 2 years. This is really protracted. Now, what does that mean? Is the correlation of Obamacare the cause of this slowness of the decline? Certainly it has to be a contributing factor. I mean, the Obamacare law does address part-time employment in terms of eligibility for a company for an employee, rather, to have Obamacare or health insurance offered to them. So you have to believe that Obamacare has some effect on this. And continuing again, this chart goes back to what we call the long-term unemployed. That's the people that are still looking for work but have been out of work more than 27 weeks. And this shows how through each presidential administration what the average weeks for an unemployed person was. And as you can see, from Ronald Reagan, it was about 16 weeks. Bush, 41, averaged about 13 weeks. It bumped up to about 16 with Clinton, which is about the Reagan average. So you could see how it hovered between 13 and 16, let's say. There was a tick up with Bush, okay, to about 18.7. But look what's happened under Obama. Now, that's not entirely due to Obama, of course. Of course. We don't, you don't want to be ridiculous and blame somebody for something they inherited, right? But the response to it is what you really have to be concerned with, because while all this stuff, you see this surge in the unemployment, the number of people out of work, or the percentage out of work over 27 weeks, that percentage is coming down very slowly. And that goes back to the other chart where you saw on the full-time versus part-time employment. The job market just really hasn't really recovered. And I know a lot of people are very excited about today's BLS report. It's not bad news, but it could be much better news. That's really the point I'm trying to make. Now let's look at the youth unemployment. Now, youth unemployment is scaling down, but it's still at just ridiculously high levels. I mean, look at this. Look at the black unemployment rate. It's 28%. I mean, it is ramping down, but it's coming from such a high range, such a high place. I mean, it should be coming down faster. And the same for Latino unemployment. White unemployment is still high, but these two numbers here, especially the black unemployment, is an embarrassment of public policy. That should not be happening. I mean, it should be much better than that. And when you look back it really wasn't much better under Bush. It's gotten absolutely much worse under Obama, but Obama's now gotten it back down to the Bush era levels, which isn't really saying much. Same thing for white and Latino unemployment. Okay, now here's the annual growth rate in earnings. And as you could see, we had here's your recessionary impact. Here's where we are today. But today is not really a good place. I mean, this is the growth rate. Keep in mind that this is not the actual earnings, but the growth rate, the annual growth rate of earnings. And it shows that we did tick up. You see right here how we ticked up in the month. That's a good thing. But we need to continue this to get this number back up around this level, 4%. And these are real wage increases after inflation. So that's it for my analysis here of the BLS report for April 2015. I hope this was helpful to you and you understand what's going on with the job market better than you did before you listened to this. And if you are interested, go to my website. I have a chart there called a cheat sheet that I didn't show in this package here that will help be a one-stop shopping chart for a lot of statistical information regarding this particular report. That's it for me, Tony Cottaspati from the Great Vocal Majority. Thanks, everybody.